Hello guys, this is Punit. I'm a price action trader. I generally trade E-mini contracts, but in this video we are going to review the Nifty 50's price action for the day. So the first bar was a doji bar. Why do I call it a doji bar although it has a bare body? It's because the price opened here and went all the way down here, then reversed up here. And after a few bars, if you see, it went up all the way here. So big down, big up is confusion and trading range price action behavior. So nothing to do on this first bar. Second bar is an inside bar. Can you go long here and put your stop loss here and hope for a scalp or a swing up? You can't because EMA is too far away. Also, yesterday's size is too far away. So it's better to wait for EMA to catch up and then find long setups. So the next bar was a doji bar. Again a bear bar closing near its low. Then reversal bar. 4 bull bars closing consecutively near their highs. So can you go long one tick above this bar, put your stop loss here and hope for a scalp up? You can, but again, EMA is too far away, day's low is too far away, yesterday's high is too far away, so it's better to wait for support to come by. Okay, this is a bear reversal bar, also double top with this. You can go short one tick below this bar and hope for a scalp down, maybe a test of EMA, or 1:1 risk reward, or the test of day's low. You can, but none of those profit target hit. And if you see within 4 bars or 5 bars, you'll get to know that we are in a tight trading range. So it's better to exit and wait for a breakout of this tight trading range. Here if you see this bar did break out of this tight trading range, it triggered the entry too. So if you went short one tick below this, put your stop loss above this and for a test of EMA, you can. But then immediately the entry bar reversed up. Whoever went short here, they are scalping out or they are getting out for a small loss. Why are they doing that? They were hoping that the entry bar will turn out to be a big bear bar or at least a bar with a bear body and then continue over to the test and give them their scalp profits. But instead, they're seeing a reversal bar, which is disappointing. And in scalp trades, when the trade reverses on the entry bar, usually it's better to exit one tick above this bar. Okay, now what's happening? Price try to go higher once, and then this is the second time, also close to EMA. Why do I call it H2 buy setup? It is because the gap up is a huge breakout on the upside. This is the pullback structure, and this is H2 at EMA or close to EMA. So it's good enough entry for me. Buy one tick above this bull bar, put your stop loss one tick below this bar, and hope for a scalp up. Why a scalp up? Because day's high can act as a resistance. And if you see it failed twice at the day's high and then it went down again. 1, 2, 3 bars closing consecutively on their highs. So this is a 3-bar breakout setup and this is also a fresh breakout. What do I mean by fresh breakout? It's not occurring in the second leg of the trend. Rather, this is the first leg of the trend. So you got your measure move target to 7 or 6 bar consecutively closing near their highs. So this is a micro channel, but what is the context? We are still in a trading range and we're also reaching the top third region of the trading range and day's high. So this was the first failure and this is the second failure. If you don't want to short this bear doji bar, it's better to wait for a strong closing bear bar, and so you can go short one tick below this bar's low and put your stop loss here. You're still hoping for a scalp down. Why just a scalp down? Like, as we are still in a trading range price action, it is better to scalp out rather than swing trade. It did give you a swing profit, but it's still better to just scalp out. Okay, 1, 2, 3 pull bars closing near their highs. Although wait, this bar is a doji bar and this is not such a strong bullish bar. So is this something like this happening there? No, right? So this is not an entry for you. And in fact, if you see, the next bar was a breakout of this EMA. Also, it is trapping all the bulls who went long here. So you can go short, one tick below this bar, put your stop loss above and hope for a scalp down. Why a scalp down? The same reason, we are still in a trading range price action. Okay, now after you got your scalp, price try to go against you once, pull back, and this is the second attempt. Yes, this is not a strong closing bull bar, but it's decent enough and it's forming a double bottom here, micro double bottom. So you can go long one tick above this bar's high, put your stop loss one tick below the bar low and hope for a scalp up. So that's it for the day, guys. If you have any doubts, please ask them in the comment section below. And if you're interested in more such videos, I will leave the link in the description below. Thank you.